Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures. It's a 15-minute chart, and what I wanted to show you guys is, look, we talk about the weekly pivot in here a lot. Well, let's take a look at this week. Here's your weekly pivot here at 2042. Okay, we had a weak gap down, didn't even do 20 handles Sunday night, did a higher low. That got us long in the room right around 2008. Then the Bears proceeded to have probably one of the worst days they've had in all of 2015, in my opinion, and here's why. You give up the monthly pivot at 17. You give up 3 exponential moving averages, 50, 100, and 200, all in one shot after they tried to establish themselves as resistance here perfectly. You go down, you make a higher low, then you give it up. The result of that is a ramp up and over the weekly pivot, and once it got over the weekly pivot, it's never given it back. You had a nice little buy opportunity Tuesday there, weekly pivot support. Pre-market yesterday, you had a move as low as 43. And if you didn't believe that weekly pivot was support before then, you certainly had to buy in it at that point, and the market did. And basically, we just had pretty much had a straight ramp job. We got into the Fed minutes there at 2 o'clock. The key there for us, at least in the room, was figuring out where that was going to be directionally. We were long 54.5. We let that run, and you just didn't want to be shorting that. So if it was going to go up, and you didn't want to be long if it was going to retrace back. So that was the key. It at that point confirmed everything, climbed up over the top, and took out the monthly pivot from July, the pre-FOMC price, and basically in going ahead and printing 89 quarter, it's basically back to the highs from Monday of last week. Recall Monday open at last week was a fail at the weekly pivot from last week, which was 89 and change. So, it's been a complete round trip, V, whatever you want to call it. So where do we go from here? I think we've got a little bit of a retrace in us. I think we're a little bit extended, although not much. I think it's just going to be a reload. You got the daily pivot down here at 68. You've got monthly pivot down here, the July monthly pivot at 74.5. The dip buyers are probably going to want a little bit better price, and they can get it down here. But I want to emphasize that all of that is so I just want to emphasize to people that a move down, if we get a move down, the chances of it being just another opportunity for the bulls to buy is very, very good. And if you haven't been buying, these pullbacks, and looking at them as opportunities to get long, you've probably been on the wrong side of the market this week. And I would strongly suggest, it's the same thing I've been telling the people in the room: don't fight price. Don't fight price. It's just not worth it. This is not a market that, and I've got a small short right now because I'm looking for this morning retrace, and it feels like garbage because I'm fighting price. So, and if it doesn't work out, I'm long gone. I'm going to cut it completely and go from there. So just be careful. Don't fight price. Don't give back a lot of good work on the long side with one trade that's not going to work out on the short side. All right, everybody have a fantastic day. Follow us at Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.